You're very welcome, Mr. Hurley. Can I start by asking you in relation to the Hohenheim report, which pointed out that prior to the financial crisis in 2008, there were no sanctions imposed on credit institutions and none that might be said to have reflected significant prudential concerns. Can you comment on why, in your view, as then Governor, as distinct from regulator, no enforcement actions were taken during that period in relation to prudential regulatory breaches, in your view?
Well, I can't comment in the sense that that was a regulatory issue that was being pursued by the regulator and the regulatory authority. That was the function, and presumably it was on the basis of their assessment.
Okay. Professor Hohenheim examines in detail in his report the separation of the financial regulator and the central bank, and he arrives at the following conclusion. Though few would now defend the institutional structure invented for the organisation in 2003, it would be hard to show that its complexity materially contributed to the major failures that occurred. Do you agree with this statement?
I think overall that's probably correct, but the difficulty with that is that you separated at the wrong time two functions. And when you look back at it, the House was divided at a time when the bubble was inflating. Now, we will never know what the counterfactual is. We just won't know. But when you look now at what's happening internationally and look at the forces that are in play to unify central banking with financial regulation, it's been done for a reason. And the reason is to try and bring some coherence to the overall function.
Mr. Peter Nyberg, when he examined the role of the central bank pre-crisis, he concluded, as in the case of the financial regulator, there was a major domestic policy failure at the central bank in respect of the maintenance of financial stability. Do you agree?
Well, in hindsight, that is the position. We have had financial instability, and that has occurred because, as I said, of the interaction of two forces. The enormous international force, which wasn't seen by the central bank. Indeed, it wasn't seen by many domestic or international commentators. But this reacted with a domestic vulnerability. And the domestic vulnerability, of course, as we now know, includes a very significant depletion of risk management practices in individual banks. That was not known at the time.
And what share of the responsibility for that does the central bank bear?
I think the central bank has to take its own share of responsibility, because when you look back at and I said this in my opening statement, when you look back at the financial stability reports, it's quite clear in hindsight that we got it wrong.
Is that a minority share of responsibility? Is it the primary share of the responsibility for the major domestic policy failure in respect of the maintenance of financial stability?
Well, I think we had a role to contribute to financial stability, and that contribution is now changed, that function is changed, and the essence or the overall...
Were you the essential guardian of financial stability?
We were the leading guardian of financial stability at the time, and so we have to accept our share of responsibility in relation to that.
But if you were the primary guardian of domestic financial stability and you accept that there was a major policy failure, then are you accepting primary responsibility?
I think we have to accept a large share of the responsibility. The reality is there were functions that we weren't responsible for. We weren't responsible for interest rates overall. We weren't responsible for fiscal policy, which was a crucial aspect of the instability. And we weren't responsible for prudential and supervision of banks. We did have an analytical responsibility and a responsibility in relation to financial stability and guidance in relation to financial stability. And we could have done that better.
The 2003 Act, Mr. Hurley, set out very clearly in section 26, it inserted a new section 33D in the Principal Act, giving the Governor or the Board the power to issue guidelines to the regulatory authority, and those guidelines had to be complied with by the financial regulator. So is it the case that you, as Governor of the Central Bank, had the power to issue guidelines to the financial regulator in respect of capital ratios, for example?
We had power to issue guidelines, but it had to be very broad guidelines, and they couldn't be specific in relation to the details of regulation.
Why does it say that?
Because it's principles and criteria. Whereas if you look at the actual provision in relation to regulation, it talks about must regulate according to their own lights and so on. There's an ambiguity and difference there. But it would have been according to principles and criteria, and so it would have been an overall guidance. And that said, we did not issue a formal overall guidance because we took the view that the financial stability reports themselves were the guidance, and particularly as we had, with the financial regulator, jointly agreed those reports.
Can I just clarify, Mr. Hurley, are you saying that the Act put constraints or limits on the guidelines that you as Governor could issue to the financial regulator?
My view is that there would have had to be broad guidelines in relation to criteria and principles.
Is that in the Act?
In the Act.
Is that stated in the Act?
Guidelines and principles, yes.
Because the relevant section is very clear and it doesn't put any constraints or restrictions on the guidelines that you had the power to issue to the regulator. And I'm putting the question to you, did you have the power, for example, to issue...
Deputy, if you have the hand there.
Yeah, Section 33D. Mr. Hurley is very familiar with it. Section 33D of the 2003 Act.
What volume? I'd like to look at the section. Unfortunately.
I'm not sure it's in the core booklet, but it's the Act.
I think it is. Yeah. I think it's somewhere in the booklet. It's in the booklet somewhere.
You're familiar with it, Mr. Hurley, yes?
Yes, but I'd like to see the particular section.
Yeah, and it does. I'll read it in full. I think it's important because it does refer to policies and principles, which you stated.
It was the broad power of guidance, and it did include. I couldn't be specific. The specific powers were withheld by a different section.
But is that your interpretation? I mean, it says you could issue guidelines as to policies that the regulator is required to implement. I mean, that's pretty clear. Policies.
Yes, yeah, policies and principles.
But could a policy not deal with sectoral concentration limits?
It wouldn't get into detailed provisions that the regulator would apply within institutions. It would be a broad view. And it seems to me that the broad view that it would adopt would be very like the broad view that we adopted in the financial stability reports. I mean, when you go through the different risks in the financial stability reports, they're outlined in the reports. And they're set out in the reports. And a guideline would have to be fairly broad. It couldn't specifically direct a regulator to do particular things that were there within their own compass.
Would it be fair to describe that as your interpretation, Mr. Hurley?
It would, but I would have a strong view on that. I mean, I don't know how you can interpret that differently.
But there are also the additional powers that are set out in Governor Honohan's letter, which the Chair referred to earlier on,
yes,
which were not removed by the 2003
No,
Act.
but I think he has put in a fairly strong sentence at the end of those powers, indicating that normally they wouldn't be second-guessed by the central bank because so many explicit specific powers were given to the financial regulator under the 2003 Act. The first power relates to ratios. It relates to ratios for the conduct of monetary policy, to create a credit shortage in the market to enable interest rates to function. It's not a power that I know has been used anywhere in Europe for prudential or regulatory purposes. I think you may find an example of it in Africa or Asia.
Mr. Hurley, I think this is the core of it. Is it your assertion that you did not have the power to issue direct policy measures to the financial regulator for implementation concerning, for example, capital ratios, sectoral concentration limits, loan-to-deposit ratios, wholesale funding, dependency, 100% residential mortgages? Did you have the power or not, in your view, to direct the financial regulator to take action on those issues?
There was a specific power to issue guidance, and as far as I'm concerned, it would have had to follow the words in the Act, the broad phraseology in the Act.
Which are relating to the policies that the authority is required to. Policies and principles.
Yes,
but they're separate. Principles is one thing, policies is
so
different.
there will have to be fairly broad guidelines, in my view and in my interpretation. But I'm not sure that it's that important in the sense that if the central bank felt, but if the central bank felt that it needed to use it, we would have raised the issue with the financial regulator, and I'm sure it would have been discussed at the board. And I doubt in that context whether it would have been necessary to issue a formal guideline. In my view, because we were discussing these in the context of the reports, and because the reports were the framework, as far as we were concerned, that was the guidance. So if we thought it was necessary to issue guidance beyond that to the financial regulator, we would have done so, and we would have discussed it at the board, and I'm quite sure we would have found a way to do that, despite the particular provisions. So I don't think it's down to a legal issue, is what I'm really saying.
You didn't believe the risks warranted that level of intervention?
We believe that the risks were outlined in the Financial Stability Report. We believed that the guidance was there, and we had agreed this with the financial regulator. So we didn't actually believe it was necessary to go further than that. But so I wouldn't get particularly hung up on the legalities.
Okay, but do you now accept that you should have went further than highlighting risks and you should have taken action?
In hindsight, the answer to that would be yes. But at the time, we believed that the action taken was sufficiently strong in the context of the issues at the time. When you look back from this side of the financial crisis, one in a century event, I think, yes, you can say the answer to that is in the affirmative.
You say in your opening statement, page 4, the reports from the Nyberg Commission and Regley and Watson suggested there was a basis for taking some action by about the end of 2005. In hindsight, I agree with this view, and I consider now that the Central Bank should have escalated and reinforced its warnings on risks. However, at the time, the Bank considered its approach in the 2005 Financial Stability Report was the correct one. So what you're conceding there appears to be that you should have escalated and reinforced your warnings on risks. But are you stating that you should have went further than that and taken action, used the power that you had in the legislation to issue clear guidelines in respect of policies and principles to the financial regulator that you believed would have made a difference?
Firstly, we didn't see the crisis coming, so we believed what we were doing was sufficient. We didn't see, neither did most commentators, domestic or international, see the enormity of the crisis that was in hand. So we didn't see the interaction of the two risks between what was happening globally and the domestic risks. Now, we took the view that the risks we had outlined in the Financial Stability Report and the framework that we had applied into the financial stability was a sufficient basis for financial regulation. But
there, as I consider now, the question is
now in hindsight,
with
all we know now, the answer to that is yes, we should have escalated our warnings at the time.
What does that mean?
It would mean that we'd have had a much stronger discussion about the risks, because if we could have seen the risks that were going to emerge, that discussion would have taken place with the financial regulator at the Central Bank Board, and a discussion on actions would have been taken at the Central Bank Board. And I'm not sure that it would have been necessary to issue any formal guidelines.
Mr. Hurley, Senator O'Keefe asked you there about worst-case contingency scenarios of a systemic bank failure, and you responded in detail. Can I just follow up by asking, in your assessment, would the evidential base for the government decision on the guarantee have been strengthened if such a contingency assessment had been done?
I think the answer to that is yes. I mean, the fact of the matter is that we had very significant information coming through the financial regulator in relation to the individual banks. Subsequently, examinations were done. I think it was by Pricewaterhouse. They came to a view, and that gave a view on a certain level of capital that was required. Now, I think that that wasn't a view of insolvency, but it was a view of extra capital that would have been required. I mean, if that had been done earlier, at least that view would have been there.
Okay. Did you say earlier on, Mr. Hurley, that there was an ECB Governing Council teleconference call on the 29th of September 2008?
As far as I know, yes. But I'd like to confirm that.
Yeah, please do. Yep.
Yeah.
Yep.
teleconference on the 29th of September.
Okay. And was Ireland specifically discussed at that meeting?
I participated in the teleconference. It would be my view is that probably the liquidity position of Ireland would have been referred to as other. It would have been a pooling of information. But I haven't got the minutes of it, so I don't know specifically. But it would have been about the issues on the European issues, generally European issues at the time. But it would have been. But certainly at one of these meetings, the liquidity position, the Irish liquidity position, would have been dealt with.
Okay. You indicated earlier on that there was considerable contact between yourself and the ECB in the days leading up to the end of September 2008. So, for example, during that teleconference call, was it accepted that a significant intervention was going to be needed in the case of the Irish banks on an imminent basis?
I can't remember whether it was that conference or the previous one, but around that time there would have been knowledge that the Irish situation was difficult and decisions would have to be made.
And the ECB was aware that a bank guarantee was one of the options under consideration?
Yes, but it wouldn't have been defined. It would have been just bank guarantees.
And was that one of a large number of options?
A large number of options. It would have included nationalisation. It would have included emergency liquidity assistance, for example. They would probably be the three main ones.
Yeah, but we're not talking one option out of 10. We're talking one option of maybe 3, 4 or 5, a relatively small number of options.
That's right. Yeah.
So the impression that Mr. Trichet gave when we had the exchange with him was that the guarantee came as a big surprise to the ECB. But what you appear to be confirming is that the ECB was aware right up to the 29th of September that a bank guarantee was an option under consideration in terms of rescuing the Irish banks.
It was aware that a bank guarantee was an option. I don't think they were aware that a blanket guarantee was that was never mentioned. But bank guarantees as an option, it's always an option.
Yes, but it was specifically referred to in the Irish context over the course of those days.
In those days, yes.
In those days, okay. And just to pick up on the point that Senator McSharry raised with you about the backdrop behind all of this, and it was a time of crisis, that no bank shall fail. Was that ever conveyed to Ireland in the sense of being conveyed to the central bank or you as governor or the government in an Irish context by the ECB?
My recollection is what I said earlier, that these issues and these sentiments came out of the general discussion as something that was generally applicable.
So at no time in the days leading up to the 29th of September, in the phone calls, teleconference calls, various communications, at no point was there any suggestion from the ECB in an Irish context that you must stand behind your banks and not let them fail?
I think that would have emerged in the discussions, yes. I think, but it would have emerged in all of the discussions.
Yes, but we're talking about Ireland, and you said that yes, it would have emerged in the discussions. Can you be more clear on that,
I would put
please?
it the way I put it earlier, Deputy, that from the discussions it was clear that these were the approaches that were being adopted across Europe for all countries.
Did the ECB make it clear that that is what was expected in the Irish case, that no bank would be allowed to fail at this critical juncture?
I think I think I can't put it any better than I put it.
I think you could be more specific.
No,
You may not be able to.
Sorry, Chairman?
You may not.
I have indicated clearly what the position was. I have indicated the context in which those messages were clear. I don't think I can go further than that. Chairman, I'm in your hands.
Well, so what I'm asking is, was that message made clear in an Irish context? In the heat of the crisis at the end of September 2008, was it made clear that Ireland must stand behind its banks?
It was made clear in the general context, but of course that applies to Ireland as well as everybody else.
its general context.
Yeah, Chairman, I find that very unsatisfactory.
Yes,
and I don't know if that's a Section 33AK issue or not. But that's very general and broad, and the question is reasonable in my opinion. And Mr. Trichet, in the course of our discussions, was very clear in his statement on that issue. The ECB never gave any message, no message to Brian Lenihan, no message to the Government of Ireland. But if you read the papers at the time, all central bankers of the world were telling all governments, don't do Lehman Brothers.
The message was,
but that's very...
the message, Deputy, the message was clear to Ireland and to me. There was a general approach, and there was no dissenting from this, I think, right across Europe.
The message was clear to Ireland, and the message was clear to you. That message being, stand behind your banks, no bank shall fail.
The points I've mentioned earlier were clear. No layman's. Governments to stand behind their banks. They were the messages.
Which you received?
Yes.
Including in the context of the Irish banking crisis?
At that time, that was the approach that was being taken right across Europe.
Okay. Over the course of that evening of the 29th, was any contact made with the ECB? Did you make any contact when you stepped out of the room where the meeting was taking place, for example?
Not during that evening, no.
Not during that evening. And can you give an approximate time of when the full plenary meeting made the decision on the course of action? The government in corporeal decision is subsequent, but the decision where the course of action was decided upon of a six-bank guarantee.
It's difficult to put an exact time in it, but I left the building about 1:30, 2 o'clock, around that time. That would have been after meetings with the banks, so I think the decisions would probably have been made probably about an hour earlier.
Okay. And as far as you can...
This is difficult.
Yeah, I understand. And as far as you can recall, were the representatives of both of the main banks present when that decision was conveyed by the Taoiseach?
My recollection was, yes, that when the decision was conveyed, it was conveyed to all. As I said earlier, there were possibilities that some people were leaving the room and coming back in, but my understanding was that the decision was conveyed clearly.
Was there any discussion on the night of solvency about any one bank or the banking system generally, or was it regarded as a liquidity crisis?
It was regarded as a liquidity crisis.
Was there any discussion at all about possible insolvency of one or more of the banks?
Not to my knowledge.
Not while you were present?
During that period, there would have been, a view that maybe additional capital is required, but that would be a normal discussion. It was not. There was no insolvency discussion that I can recall.
And in the context of issuing a guarantee, was the option of guaranteeing new debt issuances considered as opposed to an almost blanket guarantee of existing liabilities?
My memory was that the discussion going back over the period of previous days and week was about a broad guarantee which included all liabilities.
Was consideration given to just guaranteeing
no,
new debt?
Not to my knowledge.
Why not?
Because I don't think it was a satisfactory. It's not a solution as debt would roll off and it would have to be replaced. It seems to me that it wouldn't have been an answer to the problems that we were facing.
In that it may not have been credible for the markets, wouldn't have been robust enough? Or?
Yes, it would have been seen as a very significant gap, I think, and you would then have people locked in who were not guaranteed, and it was never really an option. In fact, if you look at some of the IMF papers on this, quite a number of them have broad guarantees, including all liabilities, and don't just distinguish new debt guarantees.
Okay. The final area I want to touch on is you stated that arrangements had been made for emergency liquidity assistance to be available for Anglo on the following day. How much was arranged?
What we were working on was about 3 billion, but only 1 billion was in fact drawn down. And I'm not sure it was fully drawn down because the guarantee clicked in and the process wasn't necessary.
But a facility was in place of up to 3 billion.
A facility would have been available were it necessary.
Okay. And I accept it's in the realm of speculation, but if a decision was made to extend that ELA to Anglo and not to issue any guarantee to any of the banks, what, in your view, would have transpired?
I think the risks would have been enormous. I think the contagion risks onto the other banks from what was happening in Ireland, given the sentiment, given the flows, the outflows, given the increased level of ECB liquidity, we would have been taking an enormous risk. It's not a risk I would have recommended.
And just to clarify, that 3 billion and the 10 billion from AIB Bank of Ireland, which was requested at one point, would have been fully state guaranteed?
Yes.
Thank you. Okay.